Hi, I'm Anna and welcome back to my channel, Real Raw Rentals. So in today's video, I'm going to be going over my financial update from February of 2021. So to start it off, my starting balance was $109,495.70, and that was in my savings account. Now, the biggest issue is if you look down here at my ending balance, I am currently negative. Of course, that's not a good thing. However, I have put some of my savings from other goals into my rental account. So while technically my balance in my rental account is negative, the balance in my rental account shows that it's about $8,000. So in terms of the numbers, my rental property income for February was $1,108.35. My rental property expenses were negative $1,399.71. And then other deposits and withdrawals came out to be negative $116,509.97. So the total negative balance was negative $7,305.63. And while that definitely seems like a lot, there are a number of reasons why I think that within 3 months at the most, I'll be able to get that ending balance up to at least zero and hopefully positive. There are three main reasons why I should be able to get the balance in my savings account for my rental properties up fairly quickly. One is that I have officially purchased my second property, which is very exciting, and I will talk about that more later on in the video. Two is that I'm working a lot of extra hours on a side business right now, and so I'm making a decent amount of money from that, which is all getting deposited directly into my rental property savings. And three is that I'm hoping to take a mortgage out on this property, which I just purchased in cash. And so when I do take out that mortgage, of course, my balance should increase significantly. So, in terms of my rental property income specifically, this month my rental property came from my monthly rent that I get from property number one, and that ended up being a total of $1,108.35. In terms of my rental property expenses, I had two main expenses this month. One was my mortgage payment for property number one, which came out to negative $749.71, and the inspection that I paid for my second property, and that was negative $650. So in total, my rental property expenses were negative $1,799.71. And then in terms of other deposits and withdrawals, this of course is the major one. So my personal savings and interest, that includes money that I was able to save from my traditional jobs, plus interest that I get each month from my savings account. The second deposit was I ended up selling off the rest of the stocks I own. So currently, the only stock account that I have is my Roth IRA. And my plan is to continue that for the foreseeable future, not invest in stocks apart from my Roth IRA, and then always just keep my Roth IRA as my main stock account. There are some people that advocate purchasing rental properties through your retirement accounts, and that's something I know I never want to do because I want to focus my retirement accounts in stocks so that I can focus my other money on rental properties. And then the last and largest expense was the purchase of my second property, which I paid for in cash. And so, in total, between all the closing costs I had to pay and some debits that I got from the seller, that came out to $120,005.62 for a total deposits and withdrawals of minus $116,509.97. So if we look at my total gain and loss for the month, my overall gain or loss was negative $116,801.33. And then my gain and loss strictly from my rental property income and expenses was negative $291.36. Now, the reason that was negative this month is because I paid the $650 for the inspection of my second property, which I considered as a rental expense. So, my 2021 year to date finances so far, if you want, you can pause the screen and look through it. But overall, it's just exactly how I broke it down in this video and my financial update for January of 2021, which you're welcome to go back and look at. And now for the exciting news, I officially purchased my second rental property. The location is in St. Louis. My last property is in St. Louis County, but it's not technically in St. Louis. but this property is within the city limits of St. Louis. It's a 2,000 square foot, 3-bed, 3-bath home. It has a 1-car garage, and it was updated fairly recently. So it was listed for $114,900. I ended up offering $120,000 cash. My real estate agent strongly encouraged me to offer significantly over asking, even though I was offering cash. And looking back, I think that was definitely the wrong advice. I don't think this property for me was worth it for $120,000. So, on the one hand, I think my realtor gave me bad advice. On the other hand, I was just so excited to get my second property, and so I made the mistake of submitting an offer that I was pretty sure would win, instead of looking around more for ones that made more sense. But that being said, the rent is $1,000 per month. The nice thing is that this property came with a tenant who, according to both the seller and the property manager who I talked with, she's a good tenant and she pays on the 1st of every month, and her lease is through July 31st of this year. So, in terms of what has happened since I submitted my offer, the due diligence period and closing process was very easy. There were a couple minor issues that came up during the inspection, but the homeowner paid for those to either be fixed or checked out, and so everything went smoothly. I had an issue with property management in that I really wanted to use the property managers that I have for my other property in St. Louis County. So after I was under contract on this property, I reached out to them and asked them if they would be able to manage this property for me, and they basically told me no, that it's not within the area they manage. I figured since, for one, it was actually in St. Louis, and two, it's very close to the property that I own that they do manage. And so I was confident they were going to be able to manage this one. So when they told me they couldn't, that definitely put a little bit of a wrench in my plans. However, I spoke with the property manager who is currently managing the property, and she seems really good, and so far, so good. I did get March's rent automatically deposited into my account already, and so everything is going well so far. My only concern is that she charges significantly less per month than most property management that I've seen in the area. From what I've seen, the most typical is about 10% of the rent, and in this case, 10% would be $100 per month. But this property manager is just charging a flat $70 per month. And so that's definitely nice for me in that it's $30 per month more than I'm making. However, it doesn't incentivize the property manager to get higher rents for the property because she'll be making the same either way. So for now, I'm happy with it, and if things change in the future, then I will just look for a different property management. And then the last thing is I'm looking to get a home equity loan because I am actually already under contract on property number 3. Property number 3 is actually the same property that I went under contract on back in January. And in my January 2021 financial update video, I talked about how that ended up falling through due to issues with the seller. But now everything's been resolved on that, so I'm back under contract on that property. Because it's being sold by the city, there's a relatively short due diligence period and then a 60-day closing period. So I still have over 2 months until I will be able to close on that property, so I'm not too worried about getting a loan between now and then. But if I do have any issues, then I'll have to get more creative in how I get financing for this third property. So thank you so much for watching and following along on my journey. If you liked this video, please thumbs it up below and subscribe to my channel, and I'll see you in 2 weeks with my next video.